in your book, you also say that the best way to make yourself fiscally independent, to make yourself financially independent, is to invest in the stock market, that it's the greatest money-making machine ever invented. Now, you just said to me that you do think that the soft landing narrative is, well, a farce, that it's going to be a soft landing and then a very hard landing. So what does that mean in terms of the stock market? When do you see that starting to change course?
Well, let's begin with the first and foremost that the stock market is not the economy.
Fair enough. Agreed.
There
Yeah.
might have been a time a long time ago when it was a pretty good proxy, but not anymore. We didn't have zero date options that expired in 24 hours. Or here's the real deal. I just had a special, and I used this chart that showed the money supply, the money supply that comes from the Federal Reserve and the federal government, and it goes into it's reflected in checking accounts. M2, they call it M2. And if you look at the money supply from 1929, when we crashed, to where the stock market is now, if you took out the money supply, our stock market would be lower than it was in 1929. Essentially, we have a scheme that takes printed money and transfers it ultimately to the wealthiest people in America. In fact, there's a great study out from Stanford last February or March, on that $2 trillion COVID package. COVID, I say in air quotes because it had nothing to do with COVID. And this is a liberal university. This is an amazing, everyone should read this. And it shows you over the next 5 years how all of that money will end up in the top 1%. And remember, you referenced it earlier. I said we live in a trickle-up economy. We do. We used to see that all the time on Black Friday, before the internet, when people will go after, eating stomachs bursting at the seams, and they would go down to the local mall and run over cops, like the mall cops, just to because they were so eager to give somebody who was a billionaire more money. We live in a trickle-up economy. And so because we live in a trickle-up economy, because we have what they call a propensity to consume, and every time money is printed and put in our pockets, we immediately go out and spend it. Well, the only way to really keep up with that and to beat inflation is to get in line. So, I don't own Tesla. I'm not Elon Musk, but I could become part owner of Tesla. I don't own NVIDIA, but I can become part owner of NVIDIA. And it doesn't have to be these high-flying stocks either. The bottom line, though, is that the stock market, for the most part, marches higher. Other schemes that have happened, how about we only have about we've got very few, 4,000 maybe publicly traded companies. We used to have 8,000. And within those publicly traded companies, we have about almost 500 million fewer shares because of buybacks. Apple has bought back more of its stock than, I would say, 20% of the nations in the world, their GDPs, like $1 billion a day of their own stock. So there's so many shenanigans that are going on that almost guarantee that the market goes up over time. It is indeed the greatest money-making machine in history. And as long as we have federal governments that's going to keep printing money and doing trillion-dollar deficits, as long as we have a Federal Reserve that will come to the rescue, that will always come to the rescue, then the stock market will eventually always go up. It's a bunch of money that's funneled. Although I should do the funnel up that way, like maybe a TP or a tent. But the bottom line, though, Michelle, is so if you're in that system, if you live in that system, we can debate the fairness of it. But by the same token, I'm saying while we do that, how about we take advantage of it too?
Right. So play within the game, play within the rules of the game, because until you can change the rules of the game. And I hear your point that the stock market is disconnected from the economy, but still, having said that, what kind of reaction do you expect in the equity markets if the soft landing narrative starts to fade? Does it?
It's going to be absolutely wonderful. First, the market will go down because you have big misses that'll be too hard to ignore. Earnings season will come around, the market's down, GDP is lower than we thought. And initially, the first 6 months are going to be a little rugged, a little rough. But guess who's coming to the rescue? That man who was just on 60 Minutes. He's going to have a flag in one hand. He's going to be riding on his horse. And He's gonna be like, oh, I'm here. I'm here to do it. I'm following in the path of Greenspan, the maestro, and helicopter Ben Bernanke, and I'm gonna make sure I save the day. And they're gonna pour so much money into the economy. You almost want the economy to go bad. If you're in the market, you want a hiccup. You want the market, the economy to have a couple of negative GDP quarters. You don't care. Take a little hit. All right, so what? The S&P is down 15%. Load up, because they're going to load it up. So again, it's a farce. Now, listen, that's not to say that you just set in and forget it, right? There's a lot of companies come and go. It's not always the same companies that do extraordinarily well. We all kind of know that too. There's a thing like this old saying that trees don't go to the sky. I used to think it was corny, but it's kind of true. Almost every major company at some point does hit a peak. It pulls back, but there are other companies that take, golly, I wish I had this stat right now because it's something crazy, unbelievable. Going back to like 1926, I think it's like 36,000 publicly traded companies. Out of that, Michelle, 900 are responsible for the total gain. So it's like, great companies come, great companies go. Be aware of that, but also know that the fix is in.
Right. And that stat is in your book, Charles. It is in your book. You discuss exactly how there's a concentration of stocks that are responsible for 10% of the wealth. But just to recap here, so you're seeing all of this economic sort of excessive artificial stimulus effectively catch up. We will get the soft landing. It'll be a bit of a rough period for the economy, but that's what's going to force the Fed to pivot, cut rates, and there goes the equity markets again.
Absolutely. I think that's how the next 12 months play out.
And so given that, you mentioned that, you can't just sit in there idly. What are some of your picks? What are some of the safest plays or some of the plays that you're hearing from your guests and from your own analysis that are likely to do well in that situation?
Listen, on the conservative side, names like Hershey, for instance, that's a name that I'm kind of pounding the table on this year.
You're liking the chocolate. Okay.
I am. I think they've got pricing power. I think they're going to hike their dividend a little bit. So I think you'll be okay. Companies like Estee Lauder just had a great earnings report. I think you'll be okay there. I like Caterpillar, particularly when the dollar gets weaker. It's going to be a heck of a play. So I think there's some mainstays. Obviously, I love a lot of these technology names. I just think the AI stuff is a little bit too expensive right now. But our world is changing. We have begun the fourth industrial revolution. And so you do have to have exposure to these names. And so you have some in AI, some in software, like software as a service. That's a niche in software, SaaS. And the only problem with those names, obviously, they can be extraordinarily volatile. But that's the way we are. That's where we're going. You have to have cyber. You have to have cybersecurity. CrowdStrike is a favorite. Fortinet is another one I like, and I'm looking for cheaper ones also as we speak. So those are the areas right now. I just think you have to be in those. And believe it or not, you always have to have some, in my mind, consumer discretionary. And it sounds counterintuitive if we think the economy is going to hit a rough patch. We are still going to be a $26 trillion economy. There will still be winners out there, so whether it's Ross stores, whether it's Walmart, listen, do you really, outside of the controversy in Target, do you really not want to own Target? Do you really not want to own Costco for the next 10, 20, 30 years?